Welcome to Warehouse Women, a podcast where we talk about commercial real estate, building businesses, and passive income, but most importantly, turning barriers into strengths. Hey, I'm so glad you want to know more about how commercial real estate can fit into your passive wealth strategy. Though it may seem like there are high barriers to entry for commercial real estate, you don't need millions to break in. 50 to 100K can get you in the door to investing in commercial real estate. Right now, your focus is probably on your career and your family, but you also want to set yourself up for financial freedom in the near future. The challenge is you don't have 10 plus hours a week outside of your 9 to 5 to devote to clogged toilets or tenants not paying on time. And with the current market, is commercial real estate even a good option? Right now, there is tough competition for buyers in the market, but it's also tough for those who are looking to sell. There has been a market adjustment happening in this past year, and not everyone has caught up. Earlier, due to the COVID cash influx and how cheap money was, many people were overpaying for properties. This led to many defaults as balloon payments came due and the economy cooled down. The challenge now is that property owners are accustomed to higher valuations for their properties, and there are still new investors making unrealistic offers. This makes it more difficult for an experienced operator to find a truly good deal for themselves and their investors. So yes, it can be totally scary getting into commercial real estate right now. The bright side, the fundamentals still work. The value of commercial real estate is based on the income of the property, or the income the property can generate, as long as the deal that you make to purchase the property falls within the parameters of making more money than the mortgage plus the capital expenses, and it serves a business that has good standing. There's a lot of money to be made in commercial real estate, especially if you know how to increase the value of the property by increasing the income of the property or making it more attractive to a better business. Just like there are certain businesses that are recession-proof, there are also certain asset classes with strategic advantages. You might think that pharmacies or groceries would be those asset classes, but you can get a lot of pharmacies and groceries online now. What will always be needed is a distribution facility, which is usually located within warehouses. You will always need to preserve food through cold storage. You will always need to have a place for trucks to park when they are en route to making deliveries. What I'm trying to say here is that certain asset classes are still doing really well as long as you buy them at a rate that makes sense based on the amount of income they can make monthly. So how do you get into these asset classes? You can join a fund or a syndication that specializes in these asset classes. Real estate funds and syndications allow you to invest passively with an experienced operator who will manage the headache of the business and allow you to earn depreciation, equity, and cash flow passively while you spend time with your family. There's a catch though. You need to do your homework on the front end to make sure you are investing with an operator who aligns with your investing strategy and goals. Our company is focused on long-term value-add opportunities, specifically cold storage warehouses within the industrial real estate space. We want to provide value to our investors by educating them and being a resource for them. We want to make sure you know how we operate and are happy with that before you make an investment with us. Since we are a value-add company, we are looking for more long-term investors who are excited to grow with us and excited about what we are building. Our funds are designed for busy professionals like you to gain the benefits of real estate without distracting you from your job, taking away time from your family, or requiring you to gain a PhD in real estate. If this is something that interests you, please book a call through the link below so we can get to know each other better before moving forward. Thank you so much for your time today, and I will see you next time. If you enjoyed this episode, please share it with a friend, and I'll see you next week.